Hi all, welcome to the first video in quite a number of weeks. Apologise for the long delay. It has been an interesting few weeks with about 10 days spent in hospital and then a further week to 10 days just trying to recover and get over it all. It certainly wasn't the best experience of my life, but as the doctor kindly pointed out, now my appendix is out, certainly won't be having that issue again, which is one upside. But now feeling pretty much back to normal, still a little bit tired. But yeah, essentially back to normal and enjoying my trading again. I just wanted to discuss a couple of things. Firstly, we've got the euro versus the Australian dollar pip range chart on the screen. I thought I would run over the trade that's just completed that I've just put on the forum and some logic behind the trade. It's always a little bit nicer to have some audio and some visual as well as the written text on the forum. So what we have here is the initial move off the back of the Australian jobs data it's quite a bizarre move. It was certainly moving around a lot before the announcement, and essentially the data was pretty much flat, so it was quite unexpected to see such a big move. It was around a 60 pip move for essentially a non-event, which was, as I say, quite interesting. And then price started to grind its way up, and then it popped higher around about 17 minutes, 18 minutes post data. And it reached a high of about 145.10, let's call it. And if I just flick over to the time-based chart, this is what we have here. So this was the news release, and this was the upside move that that occurred following the data. And the reason for my trade at 145.12 is where I entered. It's fairly straightforward. If I just highlight 145.12, which is here, it's right on the cam level. This is the last swing high on this point here. And you have the 85 EMA holding price down. You have the cam level, and if I just go to a 1 hour chart, it just looks right to me. It's, I guess I'd call that a gut feeling, but also it's a good test for whether this downtrend is going to hold. So my theory was, let's enter the trade, and if price does pop higher, let's just get out nice and quickly. I think, why did I set my stop to 140? So I had about a 12 pip stop, so I was happy enough to risk 12 pips to win 12 pips, which is essentially what I did. And it was a low risk trade for me. I felt the reward was certainly worth the risk, and it paid off nicely. Where price trending upwards, you can see price is making higher highs whilst the oscillator was making lower highs. It just confirms a nice setup, and I exited just within the cloud, but it turned out to be a good trade. Now price is going back up. What I want to just point out as well, the quantum method, I haven't traded it for a while, as I've mentioned, I've been reasonably ill. But just pointing out, for today's session, it would have been a very productive session. You would have had 1, 2, 3, 4, 5, 6, probably six or seven trades within there, and you would have got out before the news with around about easily a plus 10 average per trade, so that's 60 pips right there. So it still works, and I'm looking forward to getting back into it. It's just a case of applying your logic, picking your spots, and not being too greedy. And looking forward to the UK session. This could be quite volatile. We've got the ECB data coming out, and it should be interesting to see what Draghi is going to say regarding his comments as to whether they're going to taper their quantitative easing, and just to see what's going to happen. But just a bit of background behind the trade on the euro versus the Aussie dollar, and it was a pretty similar trade on the pound versus the Aussie dollars. Put my levels back in, but essentially it's a very, very similar setup. It was, how much earlier was it? It was a good bit earlier than the euro trade. It just happened a little bit quicker, but essentially the same sort of setup. That's it for now. Thanks very much.